Michigan Saves focuses on residential sector by offering a standard offer loan loss reserve to a host of lenders who then choose to lend at the rates that they're comfortable. The New York Green Bank has taken an approach where they're looking for responses, to the market to learn what the market needs. And you've now taken action to support two different models for residential energy efficiency financing. Can you tell us about what you saw in those applications and what you see in those two models and maybe the different gaps that those two different models are serving?
Sure. So as most of you probably know, we're a division of NYSERDA. And so NYSERDA has a very broad platform, including in some cases making direct loans to underserved markets. But the New York Green Bank specifically is here to support private sector participants, and we feel that the way to get the most done the most quickly is to focus in those areas in which credible private sector entities are willing to invest their time and money where they see a real market opportunity. Residential energy efficiency retrofits is a market that has been around. There's been some success. Obviously, Michigan's had a lot of success. Connecticut's had a lot of success. I think the NYSERDA Green Jobs, Green New York programs had a good bit of success. Pennsylvania, et cetera. With Renew Financial, we have a specialty finance company that is looking to operate in a very seamless fashion with a network of contractors in the state to provide a loan product. And we want to support those private sector entities that are out looking to drive that business. A slide earlier said, I think it was $6 trillion needing to get done in the marketplace. It's going to be private sector entities that really drive to get that done. So we want to support those entities and help arm them with what they need to go out and deploy. With Renew Financial, the ask there was that we provide subordinated capital as credit enhancement in support of a senior facility being provided by Citigroup. So that's the role we are playing there. Now that we've got that in place, Renew has been working with with a network of contractors in the state to begin rolling out that product broadly, and they are now funding transactions in the state. It's a loan product, which is a very important product to provide. The other transaction we're supporting that we just announced a week or two ago is with Sealed. And Sealed is a smaller operator, New York-based operator, focused on residential, but they have a pay-as-you-save model that looks more like an energy savings arrangement or a PPA, but related to savings. And if we think about the solar industry, where we've seen real deployment has been those developers that are offering PPAs to homeowners, where the decision is very simple. We'll do the work, we'll pay for it, and if you save, and if we produce power, you buy it from us at a rate that we expect to be cheaper than you'd buy it from the utility. It seems that that's been easier for homeowners to say yes to than the homeowner buying the panels themselves and getting debt for the panels. Now we do see the Mosaics and the SunGages of the world really starting to grow rapidly, but the initial real expansion of solar has been around a PPA model. So we're interested to see if Sealed, by offering a energy savings model where the homeowner pays nothing up front and simply pays an amount related to their savings on an ongoing basis, if that actually can get more customers to say yes to improved deployment. So those are the differences between the two programs.